I am going to start our recording in the event that I can find it. Okay, I think I have started this recording already, and I want to welcome you guys to our Team Vision, myEcon Team Vision training call tonight. We do have a guest that should be on the call with us tonight that I'm very excited about. It is about 9 o'clock her time. She is a tax accountant. She may be busy at the moment, and she's not joined us yet, but if we have any guests that are here, we want to tell you or take this opportunity to tell you who we are and what it is that we do and the purpose of which we are here tonight, okay? So I'm going to introduce one of our top leaders. I'm going to give him access, and he's going to share the myEcon concept with you all. We met this gentleman, I don't know if it's been a year. I know you've been with Chris, but it has been my pleasure to actually be a part of who he is because he's outstanding in his knowledge and finances, and he brings a lot to the team, and he's just seemed to be an expert at sharing the details of myEcon, and he's an executive vice president gold from Mississippi. So without further ado, I'm going to introduce to you guys Mr. Joseph McKee. Give me a moment, and we're going to switch it over to him so that he can take control and begin to share our income shifting strategy with you. All right, Joseph, I'm switching over.
All right, thank you, Miss Pace. How are you this evening?
Oh well, I'm making it.
All right, good to be on the call with you this evening. Good to have everybody on the call as well. Thank you all for joining in with us tonight. I do apologize for being a few minutes. I'm actually attending a meeting and a conference down in Biloxi, but I'm glad we got here in time. I just finished dinner, and I definitely didn't want to miss this call tonight. So I'm not going to prolong it. I'm going to share my screen with you, and I'm going to share with you who we are with myEcon and what we do, and why we feel that this is the best solution if you're trying to get your finances in order and experience financial success. So we're going to talk a little bit. It's the personal financial success company, myEcon. And if you notice those key terms, personal financial success. All right. So myEcon is all about my economy. Again, real quickly, if you think about it, you got a president of the United States that's concerned with your nation's economy. You have your governors concerned with your state economy, and you have your mayors that are concerned with your city economy. So you got to ask yourself, who's responsible for your economy as an individual? It's you, the person. Thus, we have myEcon, the personal financial success company. So before we get into what we do, I think it's only right that we share a little background information about the company. And so I'm going to tell you, it's 13 years old, so it's relatively young. It's debt-free. I want you to keep that in mind as we go through this presentation. It's a technology-driven company based out of Atlanta, Georgia. And the kicker is the company has helped its associates cash flow over $400 million back into their pockets and their homes for the purpose of eliminating debt and investing to improve their lifestyles or simply to start the process of building generational wealth. So I want you to look at a few things real quick before we move on. It's 13 years old, it's debt-free. And I also just told you that the company has helped its associates cash flow $400 million for the purpose of eliminating debt. So if the company is going to be promoting eliminating debt, it's only right that the company be debt-free itself. So there are not a lot of organizations out there that can actually say that they are debt-free. myEcon happens to be one of those companies. All right. So if we ask 10, 20, or 100 different people what personal financial success is, we'll probably get 10, 20, or 100 different definitions. So to make sure that we're all on the same page, we're all dancing to the same beat of the drum, we're going to define personal financial success simply as having enough cash flow to support our lifestyles during our working years and our retirement years. So let's look at that real quick. What are our working years? You know, that's the time where we exchange labor and time for money to take care of our car notes, our mortgages, or rent. our student loans, our credit card debt, take care of our kids, to provide the food, the clothing, and the shelter, and all of those things that we need while we're working. And that usually comes from the money, the labor, and the time we exchange for some money, all right? But now we got to simultaneously be preparing for one of three events. When we get too old to work, when we just stop working, or if we get fired. So we got to have some money to support us during those times as well. And the way you get that money is by having some income producing assets like stocks, bonds, mutual funds, real estate, things of that nature. So while we're working, we've got to be focusing on two types of lifestyles: the current one and the retirement years. All right. So there are a few things that stand in the way of people experiencing personal financial success. Let's look at those four things right quick. We've got some obstacles that stand in our way. First and foremost, inflation. We've all been hit by inflation. If you've been paying attention to the price of gas here lately, especially where I am, just about 3 weeks ago, gas was $2.19. The gas is now $2.45. All right. We can also look to other things that are going up every single day around us. Now, this is just on a daily basis, but also I want you to take this under consideration. Every 20 years, the cost of living tends to double. So now you ask yourself, what's the likelihood of your salary or your income doubling in the next 20 years? For most people, it's highly unlikely. So inflation is one of those things that is a part of our everyday lives, all right? And it's standing in the way of financial success. Number two is high taxes, which is probably the largest debt that you will ever have to pay. All right, so we got inflation that's taking some of our money every day because the cost of things around us is going up. All right, and we got linear income. Our income is staying the same. The next thing we got is high taxes. So most of us that work, we know when we get paid, before we even get a chance to spend any of our money, someone has already gone in and grabbed some of that money from us to the tune of about a third. All right. So let's break that down in the form of a dollar. Think about every dollar you make, someone is getting 30 cents from you before you get a chance to spend that dollar. But who's doing all of the work? All right. So you got two obstacles right now. We've got inflation and we've got high taxes. And for most people, they're paying about $3,000 too much. And we'll come back and talk about that in just a minute. So third obstacle, debt. If inflation, the cost of everything around you is going up, and then if you got high taxes that's taking a third of your money, it's going to lead you to the third obstacle, which is debt, because you don't have enough cash flow to take care of those things that we've got going on during our working years. All right. So we've got to finance our lifestyle. So that mortgage, that home that we have, we don't have the cash flow to purchase it outright. So we have to go and borrow that money and we have a mortgage. The car that we don't have the cash flow. So we have to go and finance that car. Going to college, we don't have the cash to pay for that. So we have to finance that as well. Not to mention some of the other things in life that we like to have, some of the other things we want to experience. We end up financing those things, and they put us in a situation where we have an enormous amount of debt. All right. So we've got obstacle one, inflation. Number two is high taxes. Number three is debt, which leads to number four, inadequate saving and investing. So look at how all of them work together. Inflation takes your money because things are going up, the cost of goods are going up around you. Then you got high taxes that takes your money before you even get a chance to spend it. Those things push you towards going into debt because you don't have enough cash flow because of the first two obstacles. So you're forced to finance your life. That leads you to this question. If you're losing your money to inflation, high taxes, and debt, when do you have time, or when will you ever have enough cash flow to actually save and start investing? All right. So we've got those three obstacles that are leading us to the fourth obstacle. And I also like to throw in big business with number four, because in addition to us having debt, we also have opportunities, or we have times where we spend money on things that we may not necessarily need or can afford. And those things too impact our ability to save and invest. All right. So those four obstacles are standing in your way. You got to ask yourself, is there a solution? And now for most people, the obvious solution for them is to go and seek out another job with higher income. So you need to ask yourself, would making an additional $10,000 to $20,000 really impact inflation? Would it impact taxes? Would it impact your debt? Would it impact your ability to save and invest? For most people, the answer is no. And if you're not able to get that job, some people go back and get another degree in college. That tends to lead you to have more debt. All right. So right then and there, that solution that everybody pretty much prescribes to is one that has been tried and is no longer really working for the challenges that are facing us today. But with myEcon, we've got a solution for you, and we teach you how to generate 5 new cash flow streams. All right. Cash flow stream number 1, we teach you how to correct your tax withholding. Notice that it says correct tax withholding, not manipulate your tax withholding. The second thing we teach you to do, we teach you how to minimize your taxes through a home-based business. Third thing we teach you to do is to generate business income. Why do we want you to generate business income? Well, think about this. I told you there's going to be 1 of 3 things that happens to you as it relates to work. You're either going to get too old, you're going to get fired, or you're going to simply retire. Ask yourself, can you leave your significant other or your children your income from your job? We can't leave them the income from our job, so we've got to start to own our own income. We need to own the income so we can actually leave something behind, leave a legacy. So this is why we teach you to generate business income. And then we teach you to eliminate debt. Remember, myEcon is a debt-free company. And one of the things we want you to do is we want you to get cash flow and eliminate your debt so you can end up with cash flow stream number 5, investing to build passive income. All right, so we've looked at them overall. Let's look at them in detail real quickly. Cash flow stream number 1, correcting your tax withholding. It is a known fact that 80% of employees have too much money withheld from their paycheck for taxes. How do we know? First, the IRS says so. Number 2, 80% or more get a tax refund to the tune of anywhere from $2,500 to $3,000. And now, you may be saying, I get a refund. I'm getting that money. You got to keep in mind that Uncle Sam doesn't pay interest on that money that you give them. All right. So every day, every time you get paid, there's money that's being withheld from your paycheck, not because your employers want to withhold it. It's simply because of a way you filled out a form on the front end, and you actually instructed your employer to withhold a certain amount of taxes from you. Again, the average refund is about $3,000. Some of you may be saying, well, I get my money back the following year, but what you miss out on is the return on investment. So if you, say for instance, if you got $250 that you're paying too much a month, you could actually be putting that $250 somewhere where you're probably getting a rate of return about 8%. And now your money is making money for you. You can actually see that. But think about this. If you've been working for 15 years and you've been paying $3,000 too much in taxes, that's $45,000 that you miss out on a return on that investment. So not only do you lose out on the $45,000 that you've overpaid in taxes, you also lose money because you don't see any return on that investment. All right. So what we do is we teach you how to maximize your take-home pay and use it for investing or debt elimination to improve your lifestyle. So that's correcting tax withholding, income stream number 1. Now, income stream number 2. We're talking about minimizing taxes. If you follow our government, anytime they want you to do something, they tend to give you an incentive. They tend to want to reward you for doing things that they want you to do. All right. So if you are a business owners tend to get tax breaks and deductions that the individual that's simply working a W-2 job, they're not afforded those luxuries. Okay. What do I mean? All right. So McDonald's has a restaurant and they have trucks that deliver food to the restaurants all the time. All right. So they have to put gas, they pay mileage for those trucks and things of that nature. Well, guess what? As individuals, we too spend anywhere from $6,000 to $8,000 a year maintaining our vehicles, putting gas in those vehicles, traveling back and forth. And if you're operating a business 90% of the time, $6,000 to $8,000 could easily be used to minimize your taxes. Number two is communications. We live in a society where everybody has a cell phone, people have internet. This is how we communicate. This is how we connect and contact with each other. Again, we're spending anywhere from $1,000 to $1,500 anyway on these things. So as a business owner, guess what? That $1,000 to $1,500 is now used to minimize your taxes. Now, here's what I want you to think about before we go a little bit further. You're going to spend money on your car and truck anyway. You're going to spend money on your communications anyway. So, and you don't have to think or pray about those things. So the things that I'm telling you right now, these are things that you really don't need to think or should have to pray about because you're going to spend this money anyway. All right. Which leads us to travel. Some of us on here, we love to take trips. We take vacations. We go visit people. Maybe it be, whether it be a day, whether it be 5 days. But we're going to, again, we may have to purchase airline tickets, hotel stays, things of that nature. So we spend anywhere about $3,000 to $5,000 a year on travel. And then number four, for people that have children, you know, we have kids that participate in all types of extracurricular activities. Basketball, cheerleading, dance, they may play soccer, they may be in the chess club, all right? But we got high school seniors. If you're like me, you got a junior prom. They've got senior trips coming up, things of that nature, graduation. So instead of giving them allowance, we teach you how to pay your children a wage, and you can pay them up to $12,000 per child. And now that money that you were simply spending on extracurricular activities, that money is now no longer just going out the window. It's been converted to a wage because your child is now working for you in your home business. And guess what? You can now use that $12,000 to minimize your taxes. Now, these are expenses that you're going to pay anyway. With myEcon, we teach you how to use these as adjustments to income, and we have you to simply correct your W-4 tax withholding certificate, and now you're in a position to minimize your tax liability. So for every $10,000 that you have in tax deductions, you can save yourself on average about $2,500 to $3,000 in real-time cash. All right. So that's minimizing taxes. Third stream of income is generating business income through a world-class business system. All right. We also provide you with an income shifting membership, part of which I've explained to you in the previous slides. That includes the income shifting strategy. It also provides you with a cash flow manager software that allows you to keep good records and keep a budget for not only your business, but your home. We provide you with identity theft protection up to $1 million. Not only that, but you get free and discounted legal services. You also get a smart money credit system that not only teaches you about credit, but also provides you with the necessary tools for repairing, restoring, and maintaining your credit. All right. And additionally, you get discount travel and corporate perks, along with some other discount products and services. Now, how do you generate your income? Well, we got a world-class business system for you, and we got a powerful retail strategy, all right? That includes some discounts, products, and services. We know most people don't quite understand or quite know what type of business they want to start. We know most people not quite sure what products or services they want to offer, or what the price point should be for those products and services. So I want you to think about this powerful retail strategy as being like a business in a box. Think in terms of if you were purchasing a McDonald's franchise, there'll be no doubt that you would sell a Big Mac. There's no doubt that you would sell McCafe. There's no doubt about what the price would be. All right, so we provide you with the same thing. So the identity theft ID Defender, you're also able to market and sell that to the mass public in addition with the smart money credit system. So if you know someone that's seeking credit repair, you can offer them the smart money system at a price that's already established. You can also offer your business friends who probably don't have a record keeping software tool. You can provide them with the Cash Flow Manager app. They can book travel through you. You don't have to be a travel agent, but they can book travel through your portal and you can get paid. You also have health and nutrition products. And then for those of you that love to shop online, there's a cashback mall for you. So think about it like this. You get to go to the cashback mall, visit your favorite stores, you can shop, save some money, and also make some money simply doing what you love to do. And then if you know individuals that like to do the same thing, you can simply share your cashback mall with them and you can earn some cash off of their shopping. All right, so we told you this is a powerful retail strategy that's already set up for you. And it comes via a world-class business system and a website that's already designed. Now, that's the first way you can generate some business income. Here's way number 2 that you generate business income. If you're looking at this screen, yes, you see there's a few circles and there's some arrows. So yes, this is a network marketing concept. We like to show you as 3 is the key. Why are we saying 3 is the key? Well, when you get our income shifting membership, you get started with myEcon, you come in as a marketing director, but we want everybody to become what we call an executive vice president. How do you reach that level? Simply refer your first 2 people, and then on your 3rd individual, you are an EVP. Now, I want you to look at this real closely because the first 2 people you refer, you would earn a $10 upfront commission that the company will pay you the following week. All right. And on your 3rd person, you earn $35. So your 3rd person and beyond, you get $35 upfront commission. All right. Your 3rd person is key because it unlocks your base shop. So what we teach our associates this. We teach you not only to get your first 2, but we want you to put 3 people in your base shop on the front end. So if we do 3 people, let's look at this chart. And before we really look at these numbers, I want you to know that the chart is simply for illustration purposes. Is no guarantee of what your earning will be. This is simply what it could be based on some time, energy, and effort. But if you got 3 people in your base shop, let's look at what's happening. Your first 3 people, you're going to earn $105 in base shop earning. And then you got your 6 people with $150, and we go on and on. This chart shows what happens when this cycle completes itself 9 times. After 9-time completion, you've got $38,355 of total base shop earnings. Now, this could be 9 days, this could be 9 weeks, this could be 9 months, this could be 9 years. It's totally up to you. But look at the potential that you can earn with myEcon by simply learning our income shifting strategies and then sharing it and remembering that 3 is the key. All right, so this is upfront commission. Not only that, we offer you residual income as well. So for every income shifting membership that remains active, the company will start paying you monthly income. You can see 10 memberships get you $30 worth of monthly income. 100 will get you $500. 500 will get you $3,500. On down to 10,000 will get you $80,000. And we've had some people in myEcon that have been able to build their teams of 500 or more, and they're getting that residual income of $3,500 a month. All right. So I did not mention this on the front end, but when we're looking at those obstacles, there are 2 things that you can do to kind of outpace it. You need to build leverage income and you need to build residual income. We just showed you what leverage income was like. And we also showed you now what a residual income looks like. All right. So again, these are for illustrative purposes and not a guarantee. Now, that was income stream number 3. What do we want you to do with that money? All right, so when we teach you how to correct your tax withholding, and because you're operating a home business, you're able to minimize your taxes and adjust your W-4. And let's say anywhere from $200 to $600 is the average that someone will bring in. So we're going to say $500 you get from correcting your tax withholding, and then we're going to say you've generated another $500 from our world-class business system, all right? So you got $1,000 additional cash flow in your home. What do we want you to do with it? We don't want you to go out and simply spend it. We want you to take that $1,000 and use it to eliminate debt. Let's look at this example. You've got a car note, you got a $17,000 balance, you got 32 months to pay, and you're currently paying $545. Well, if you add that $1,000, you now got $1,545. You're able to eliminate that car note debt in 12 months. Now you got a free $1,545. What do we want you to do? Take that $1,545 and roll it down to the Visa card. where you got $8,000, 78 months left to pay, and you've been sending them $200. Now we're going to send them a new payment of $1,745. And look, 5 months, Visa is gone. We've got $1,745 left. And guess what we're going to do? Roll it on down to that mortgage where we got $200,000 waiting to just be destroyed. 360 months. We got $1,200 current payment. We've now got $2,945 that we're sending. And instead of 360 months to pay it off, we've eliminated the mortgage in 68 months, freeing up $2,945 for us to have at our disposal. Now, look at these three numbers to the side. Total debt eliminated, $225,000 in a little over 7 years. But you saved $352,000. We saved $352,000 worth of cash flow because we were able to eliminate all of our debts a little bit earlier. And now we've got $2,945 a month for investing or our lifestyle. Now, this brings us to income stream number 5, the investing to build passive income. Think about it, $2,945 a month, that's free. What are we going to do with it? We're going to take that $2,945 a month, roughly about $340 a year, and we're going to put it somewhere for 8 years, and for 10 years, and let's say we're getting 8% rate of return. We've now got $538,000. If we leave it there for an additional 5 years, we've now got $1,019,000. All right. So I want you to think about it overall. You've gone from correcting your tax withholding, minimizing your taxes, to earning some income, putting that income back in your pockets, in your household, generating some additional income. Now you've eliminated some debt. Think of what it would be like if you had no car note, if you had no mortgage, no student loans, no credit cards. What could you do with your cash flow? And how could it help you? Well, we just provided you with an example of what you can do with an additional $2,945. All right. So those are the 5 income streams. So if you sign up today, you will receive a personalized website that includes our world-class business system and the income shifting membership that gives you the income shifting strategy that we just discussed, provides you with the cash flow management software to keep the records of everything that you're doing as it relates to your myEcon business, the identity theft protection. You also get free and discount legal services, not to mention the smart money credit system that you can use to not only build personal credit, but to also build business credit. You get discount travel and corporate perks, plus the valuable tax benefits associated with home-based business ownership, all courtesy of myEcon. Now, normally this would retail for about $199.95, but you are in luck. This is a great day because you won't pay that. myEcon has a summer sizzle promotion where we're offering this $199.95 value for $19.95 to get started, to get all of these things. And you keep it after that, then every 30 days, you're paying $34.95 per month to maintain your membership. And the beauty of it, both the $19.95 and the $34.95 monthly charges are both tax deductible. All right. So in addition to this, you also get access to a network of individuals who are seeking to help you get and experience personal financial success. All right. Thank you. That's what I have for you this evening. We definitely would like for you to join up with us. If you're on this call, someone invited you on this call, make sure you get back with that person and let them know that you're ready to go. You're ready to get started on your journey to experiencing personal financial success.
All right. Thank you. Thank you. Thank you, Joseph. I don't know anybody that would be a guest on this call tonight that would not at least consider all of the valuable information, education, training, opportunity to actually change your entire financial lifestyle. So thank you so much, because you put it plain. I like the part I put on our group me, that I definitely like the part and how you share with us the 9 months, the 9. and the fact that it takes your efforts to get to where you desire to be. But if you make an effort to work with us in myEcon, not only will you build extra income, but you will build a wonderful future for retirement. Okay, thank you so much, Joseph, for the presentation on tonight. I am going to let everyone in. I found out the last time, I don't know why I have to click on this promote panelists. So I'm getting everybody else on the call as we speak. And then I'm going to allow you to introduce yourself for a moment. We have our guest who is on the call already. She's been here and I'm so excited and I want to give her that time. I know that she's been working hard like myself. And so we don't want to waste her time at all. I'm just like a little baby right now, just excited that she is with us. So with that being said, if you want to introduce yourself, I see we got a lot of you. I've got about 18 on the call tonight. So go ahead and introduce yourself. Let us know that you are here.
Lambert.
All right, welcome to the call, Miss Lambert. Who else do we have?
Mary Miles from Conway, Arkansas.
All right, Mary, welcome to the call tonight.
Thank you.
All right. Next.
Greg Hunter.
All right, welcome to the call. I'm going to ask you guys that if you do have some background noise or you have your phone by you, mine, I'm sorry, I thought it was down. Go ahead and turn your ringtone down, or you can mute out if possible, okay, so we can maximize the call. All right, go right ahead. Someone else introduce yourself.
Monica Gibbons from Little Rock, Arkansas.
All right, welcome to the call, Monica. Glad to have you. All right, who else do we have?
Latoya Yarbrough from Monticello, Arkansas.
All right, welcome, Latoya. Welcome. All right, who else do we have?
Barbara Cooper from Monticello.
All right, look at our Monticelonians. You all are in the house. Leaders are here tonight. I am so excited that you guys are here tonight. All right, who else do we have? Introduce yourself.
Michelle Smith from McGee.
All right, Southeast Arkansas, McGee in the house. All right, welcome to the call, Michelle. Who else do we have tonight?
Mary and Marvin Davis from Louisiana.
All right, welcome to the call, Miss Mary from Louisiana. All right, who else do we have? Introduce yourself. I think we got.
This is Latricia Tatum from Monticello, Arkansas.
All right, welcome to the call, Latricia. Okay, we'll take a couple more. I think I see we've got Renita. I'm not sure if I'm pronouncing it correctly. Renita or Renetta Terry from Little Rock. I think she says that she is on low bandwidth. And I think I had Miss Natha Peel, who is with us on the call. Do we have anyone who called in? You're not necessarily connected by video, but we're going to take you if you have called in. Let us know if you are on. Let us know who you are and where you're from. All righty then. Okay, I'm going to take a moment to go ahead and, like I said, go back on mute. I keep hitting the unmute, so the ones that need to be unmuted will be right here with me. I am going to pass this. I'm actually going to share another screen with you guys, or I think I'm already on the screen that I need. Without further ado, we want to go ahead and move on with the training on tonight. Those of you, can you tell me if you can see the screen that I am on at this moment? It is on myEcon screen, and it reads, America is the wealthiest country in the world. Join us and get your share. Can you guys see that?
Yes.
Yes.
Okay, great. Then I am batting 1,000 because I'm in the right place. I'm getting the hang of this Zoom. All right. Okay. So guys, I'm going to go ahead and log in tonight. We're going to talk taxes. Our guest is an expert by far. I give her all the respect in the world. I think I've been in this business for 14 years, but she has by far probably exceeded everything that I could ever dream of becoming as a tax accountant, tax professional. And it is definitely a pleasure for her to be here with us tonight. I am going to I'm doing this way because I want you guys to become familiar with your back office. And if you see me, I am logging in. We want to expose you to the fact that everything that you need is at your disposal when it comes to myEcon. Our website is meaty. It has everything that you need to operate your business successfully. That is both by products and by finances, okay? So I've logged into, you guys are watching me and we're also recording this, but I'm simply logging into our training material and I am going to download the common tax deduction info packet, which is right here, okay? I already had one on my computer, but I wanted you guys to actually see this so that you could get a chance to know how to go to this information once we are done, okay? All right, watch your noise in the background. Go ahead and mute out if you have noise in the background, okay? All right, so I am going to this document and I am going to pull up the common tax deduction booklet. And this is just an introduction because I want Miss Yvette Best, I have asked her tonight to actually share. I'm going to actually go through this booklet through the deductions that are available to us as business owners. I must say that sometime around tax season, I'm gonna be honest with you guys, I kind of get a little irritated at people who have had the training. Honestly, all of the time. Some people can be excused because they're just now becoming a part. So you're our babies. But those of you who have been here for at least 3 years, I really want to say at least a year, and you have been keeping up with your training, you have been accessing your back office, you have been watching videos, you have your manual, you should be more familiar with how this works as you operate your business legally, so that you will know that we as myEcon, we teach 7 common tax deductions. Now there are so many more deductions, but what we want you to learn to do is to be able to master the 7, because out of 7, if you could understand how to create the deductions as a business owner from these 7, if you learn how to keep your records, what the law says about each one of these and how you can actually use these to benefit yourself in the first step of income shifting, then you would be batting 1,000. You would actually see an increase in your tax savings. And so we're just introducing this to you tonight. I've asked her, I'm just gonna let you know, I'm gonna skim over a little bit of it at what they are, and then I want her to tell us just how this works and how you as a business owner, listen, you guys are, okay, I'm gonna reveal this to you too, because there are some people that try to operate as if you are a traditional business, as if you have all of this god-awful income coming in, you've got all this major stuff going, like you are like a corporation and so forth. But we're teaching you from a standpoint of building your home-based business as a sole proprietor, in which you can realize several $1,000s of deductions, but you do have to work it, and you do have to make sure that you line up with the rules and regulations of the IRS, okay? So one of the first deductions that we have the opportunity to take is transportation, okay? Under transportation, and I'm just giving you a review because you guys have this, and then I'm gonna introduce Yvette to go right into sharing with us how this works. Just we're talking about car and truck expenses. You guys know that you can write off deductions for using your car in the business, right? I'm not gonna go into details. I want you to also understand that you have the opportunity to write off travel. If you're working your business away from home and overnight, you have that opportunity. And then you have the opportunity to write off interest as well, interest on certain loans and that are connected to your business. Then you have an opportunity to write off wages for those who are importing your business. I'm going to let her give you details on that. And then you which are family members, as a matter of fact. Then you have many opportunities to write off deductions, and we're just talking about these common deductions that include car and truck expenses, travel, communication, interest, wages, and depreciation. So that's all I have to say about that, because I have her on the line. She's an expert. She's an author. She very well can explain everything to you, and I want to give her the opportunity to do that, okay? So let me see if I can get, Yvette, are you ready?
I'm ready.
Okay. Video, do you want the video on or off?
I was trying to turn it on, but you kept turning it off.
Girl, excuse me. I got you now. I see you now. You so cute.
Ooh,
Yeah,
I probably was over there looking sleepy.
No, I'm the one. But you guys,
Both of us.
So I'm telling you, and got to get right back up early. Well, I'm gonna work some more tonight after this call, and then back up early in the morning.
Yes, I'm gonna work a little bit more after this call, and then I'm going to the office at 8 o'clock tomorrow.
Me too. All right, you guys. Well, listen, Miss Yvette is an author. I have been posting her information there so you guys can see that. I want to tell you right up front, you need to download copies. You need to buy copies of her material, because I bought them and I thoroughly enjoyed them, and they have taught me a lot. Yvette, I asked you to speak to the myEconers tonight. Tell them, sometimes people in myEcon get it confused as to how they are to legally work their business and write off these deductions. I guess to make it plain, some people want to enroll in the business, and then at tax time, they have all of these deductions that they want to submit, and I guess I'm suspect by being a tax professional and not hearing from them. I'm not sure if they understand. So if you would please help us understand how this works and how people will be actually eligible to write these deductions off.
Well, first they have to materially participate in the business. There is a such thing called tax avoidance, which is one of the things you actually are doing by being in myEcon and having a home-based business, but you do not want to participate in tax evasion, because that's how people get orange jumpsuits. So being in myEcon, so now y'all all members, you now have a legal home-based business. But there's a few things that I like to have in place when you have a home-based business. You want to have a place in your house that's exclusively used for business. I love social media. If you have a room in your house that you're using for business, document it. Put it on Facebook. Put a sign on the door. This is where I do my business at. Take pictures, because all of that things can help you in the long run if you ever become audited. Because again, what most people do not know, the IRS tracks your Facebook and social media actions. They want to see what you're doing, because if you're on there holding up stacks of money and then all of a sudden they see your income tax return and you're saying I'm not making any money, these things could come back to hunt you. But if you're using your home-based business and documenting things that you're doing, it can help you as well. I also say if people give teachings inside of their house, which I say are seminars, because in the new tax bill, entertainment is no longer allowed. So I tried to, when we used to promote, you're going to have the 4th of July cookout, going to be sponsored by your business. And you are going to have the Christmas party that's sponsored by your business. Those are considered events, and you cannot write those off like entertainment. But you could change it to a seminar, I'm doing a teaching, I'm giving education, and all of those things will still allow your meals to be written off. So now that you have a spot that's exclusively used for your home-based business, you want to make sure you know what the square foot of it is. So let's use 300 because that's usually the amount of space that a home-based business inside of a home would be. And that might be 20% of your total square foot of your home. So that means 20% of all of the bills that you pay in your house is deductible. That means light, gas, water, cell phone. I don't like the internet cable option because it's all inclusive, but I'll allow it. And those things, 20%. So when you hear somebody saying they're writing off all of their bills, that is incorrect. It is based on the percentage of your house that you're using for business. And even if you go to, if you're not doing your taxes yourself and you're paying someone, just make sure that they're taking a percentage. You don't, because you have what is called direct costs and indirect costs. Now, direct cost is anything in your home-based business. If you buy a desk, a chair, a computer, pens, pencils, paper, all of those are direct costs. Indirect cost is your light, the gas, the water, because that goes through your whole house, but it also is inside of your business. So just be careful that they're not writing off all your water bills for a whole year because you could subject yourself to an audit. This is why people don't like to use the business in their home because they feel they get open for audits. But as long as you're keeping great documentation, and anytime that you can use third-party verification, and when I say third-party verification, I'm meaning at the beginning of the year, you take your car to get an oil change because when you get your oil change, they clock your mileage. Then at the end of the year, you get an oil change right before December 31st because that also clocks what your mileage was. So now you have at the beginning of the year, someone else verify what your mileage was. And at the end of the year, you have someone else that verifies your mileage. And anything in between can be subjected to be used as business miles. And you just keep those little plastic, the things like the window clings that they put into the window, keep those because it's gonna have the date that they change your oil and the mileage. That is called third-party verification. When I say third-party verification, why I want you to take pictures of your home-based office is because social media is your third-party verification. You're taking lives inside of your home-based business. That's a third party that's recording your information and storing it, saying that you were inside of your home-based business that you showed on social media. And that's always good when you, if in the event that anything should ever happen, you have someone other than yourself saying, this was my business.
Wow.
I think that was a lot.
That was a lot, but that was outstanding because what happens most time we'll tell people that, you know, your business can't, you know, if you don't say anything, people are not, you know, are not going to be drawn and know that you have a business. We have a lot of, I guess we have introverts in the business, and then we have some who are who have the philosophy that they're not going to share their business until they have gotten this major breakthrough. They really know what's going on. They're, you know, popular. I don't know, whatever their reasoning is. That wasn't me when I came to business. Even though I was tax sheltering also, I'm good. I mean, I immediately started to advertise. And so what you have just said really to me speaks to the fact that everyone wants to be closed mouth about their business or shy on social media. That's not what we talk about. We talk about family and friends, but what you share on social media is your backup, and it is necessary when it comes to your taxes, correct? Is that kind of what you were saying?
Yes, because you're using the social media as third-party verification in your business. You're all, even what I said with truck and car expenses, you're using your oil changes at the beginning and the end of the year as third-party verification of the mileage that you have. Of course, you're going to be using the cash flow manager to capture the mileage that's in between, but it's always good to have someone else verify that was your mileage at the beginning of the year, this was your mileage at the end of the year. Now you just have to substantiate the mileage that was in between those two numbers. And if you're using your car, if you have a brick and mortar as well as a home-based business, all of your miles are business miles. So now that's not, you can't say it's objective. You're giving them objective evidence that's showing these are the 2 times I took my car in. I took it to Midas the first time. I took it to Pet Boys the other time, and they both documented the mileage. So everything in between was my business mile.
Wow. All right. That's pretty cool.
Because you have to remember, okay, so something that's on the form that you probably don't see, they ask, is the documentation that you're giving that's substantiating business miles, is it written? And if you have it, do you got evidence of the deduction, and is it written? Yes.
Okay. Well, there has also been, maybe I'm wrong, but there have been many questions from our associates and frustration that they are required to write down their odometer reading when it comes to their mileage. Tell me, how true is that? Do we have to write down the odometer readings, or do we, or can they use Rand McNally?
Oh no, you have to put it this way: with the new tax bill, they're getting strict with car and truck expenses because it's so vague and hardly anyone is keeping documentation. So when you have a mileage log, what is supposed to happen is you are supposed to, one, put the starting address to where you are. Then you supposed to put the whatever was on the odometer when you left. Then when you get to the place that you are, you supposed to put down the address to where you are going. And then you supposed to clock the odometers when you get there. And then you're supposed to state what is the business purpose. So sometimes you don't want to just say customer meeting. You want to say, I met with so-and-so about the business or about myEcon. And the reason why they're getting so strict is because say you buy a brand new car to put into the business. Now you have this new car and you're able, if it's a regular car, you can depreciate $10,000 at one time. If it's an SUV, you could depreciate $25,000 at one time. So if you're going to be depreciating this amount of money from your income, oh yeah, we want to know what kind of mileage you're doing. And the thing about it is that's so funny. There's loopholes around everything because you can actually buy a car on December 31st of the year. Drive that car for one day in your business, and it can be considered 100% a business expense. Just one day. It works the same way if, I give a different example. If you was divorced on December 31st, you were single all year long. But if you got married on December 31st, you was married all year long. These are the loopholes that's within the IRS code. Is there to work in your favor, but it really works best when it's really set up for you to have a business. It's not set up for employees at all. In their mind, employees pay, bosses don't.
Whoa, that's amazing, and that's eye-opening, I'm sure, for everyone here. Because my thing is that I want them to get this. Some have been here for several years and still struggling with fighting with the IRS code, I guess you would say. But when we get it, it's to our advantage, and we just want our teams and the people that are part of myEcon to really get it, because this is going to mean that we are going to have to keep good records, on a daily basis and know the notation. You mentioned, since you mentioned this, and you mentioned how to notate. Some of the issues that I've had with myEcon is not necessarily on my team, but across the state, okay, is there notation of things that they are trying to write off. Is there any more that you can share with us about good notation that actually shows a relationship between you and you operating your business, Yvette?
Well, if you're doing business meals, because business meals are deductible at 50% of the meal.
Mm-hmm.
What I do, and this is just my practice, and it's a very good one because I've seen it work inside of an audit.
Mm-hmm.
When you are going to meet with someone to discuss business, it's supposed to be a pre-planned event. It's not something that you just decide that you meet with the person and now you have a business meeting and you get to write it off. It's supposed to be pre-planned. So now we have all this technology. You got text, you got phone, you got email. I usually will set up, I will email the person in advance and tell them, we're going to meet on this day, we're going to discuss this, and we're going to go here. So I always usually try to say when, what, where, and how. So if I try to put those things in some type of written formula, so that way later on when that date comes, because I have like a separate app that I use, it pulls my email when I get to that location. When I drive to the location, it says, are you going to meet with this person now? Yes, I'm going to meet with that person. And I save the email to that event. Then when I go and I'm finished eating my meal, I take a picture of the receipt and it stores it as a nice little business meal package that I like to, for lack of anything else. So you have the email saying we were going to meet. So you already have it pre-planned.
Mm-hmm.
Get to the location, and now you track your mileage, leaving from your house or wherever you were to the location. And then when you get there, you take a copy of the receipt. And if you don't, take a picture of it. And I usually just write business meeting and the date on the top of the receipt and take a picture of it. Now you have a complete package for your deductible business meal. Now, a lot of people will be like, oh, Yvette, that's a lot. But just think of it. If I have $3,000 worth of meals a year and they were all business related and I'm able to save $1,500, that little minute of work is not going to kill me.
Right.
You do have things that's 100% deductible. So if you build a team and you have a seminar at your house for your team, that those meals are 100% deductible. Of course, you want to get on social media and say, I'm holding an educational summit at my house for my team, because that team is going to say any food and drink that's within that team meeting is 100% deductible.
Make you want to shout. I don't know about.
So that's why I said you got to change the wording. You don't want to say I'm at the 4th of July cookout. No,
Right.
we're having an educational summit here at the house. It might just happen to be on the 4th of July weekend.
Right. And that's something that, because I want to go ahead and ask you about this, since you mentioned the wording, you don't want to just say you at the 4th of July cookout.
Because it may be considered entertainment, just like when you giving boxing parties and all of that, that's considered entertainment. And for the new tax bill, that's all out. No entertainment if you said like before, you would have say you pre-plan a business meal, and then you would take the person out, maybe you'll go to play golf. Then you would have your business meal. The golf event would be deductible as entertainment as well as the business meal. But now the golf is not deductible anymore. Sometimes you can meet up and have a business meal and go to the movies. The movies would be considered the entertainment part, but all of it would be deductible. It's not deductible now. So basically what you want to do is have events, but you want to change it to educational events. a seminar. You want to say I'm having a meeting. You want to say I'm having an educational summit, because what we are teaching is financial education. So it's not hard to say I'm teaching education, because that's what you're doing.
Right. Well, see, that brings me to wages. Okay, I'm not gonna keep you all night, but that brings me to wages, because when we talk about employing our children in business, and certainly we have that great opportunity to write off more with their employment in business. But what I have found it hard for some of my economists to do is to understand that when they go to Old Navy and buy a pair of pants and a shirt, we don't record it as Old Navy buying Old Navy, the Price, and Jonathan. Okay, so tell us how that works.
Okay, so when you hire your child in your business, they supposed to be actually doing work. If y'all ever get a chance, go to YouTube, Google my name. I have a channel called The People's Tax Accountant, and I have a whole video that teaches you how to properly hire your child in your business. From you should have a job description, you should have time cards, it should be age appropriate. And I do not believe in putting any child in the business that's not at least 7 to 17 with an age appropriate job. And for the video, I used the case study. I used my own son, who at the time is 8. He shreds documents at the tax office. That's his job. He's a shredding specialist for Best Services Unlimited. That's his job. And you pay a wage. So I looked up what a salary was for a shredding specialist, because it's actually an actual job. And then I just took half of that salary because he's only 8. So, and we only doing it for 4 months. So I took the salary, I divided by half, and then I divided it I divided it in half, and then I divided it by 12. And I said, okay, this is how much he could get paid for 4 months, because it's 4 months he's going to be doing work. And then use that formula to say this is how much he was being paid. When he was being paid, of course, I didn't go over at that time last year was $6,350. So you don't have to file. He won't have any payroll tax, any Social Security or Medicare, but I was using a payroll service. He was receiving a check being deposited into a savings account that was I was the holder, but he was the beneficiary. And then when I wanted to use the funds, I just used the funds from the account to pay for his karate, for his clothing. But all that time, I'm still able to claim all of that income as wages, because he's going to actually receive a W-2. But he won't have to file any taxes because he'll be under the filing status. But for 2018, since all of the standard deductions pretty much doubled, you can pay your child up to $12,000 a year. And long as you are doing it in the same sequence that I'm telling you, you have to have them on payroll. It has to be done through a payroll service. It has to be going into a separate account, if not in their name, but in at least a savings account that they are the beneficiary of. And then you use the funds from that account to do whatever else. Because once the funds go through the payroll service and goes into the account, you can do whatever you want with it. You just want to be having that in place, whereas if it's once a month, if it's every 2 weeks, if it's twice a month, you just want to have that steady flow of income going into that account. And that's something you can do if you want to pay it out of if you get paid on your check and you decide to take a portion of your check to pay your child with your check, you're still going to be able to write that off as wages, because you're going to have a W-2, and the W-2 dictates that you have wages that was paid to an employee, which is your business. It just happens to be somebody that's related to you. Okay. And as long as this year is not over $12,000, you will not be paid. The child will not be subject to any taxation, any Social Security wages with withheld, or any Medicare taxes being withheld.
Okay.
And all of the things that I'm telling you now is how other people are winning at the game. When you wonder why some people are paying no taxes, this is exactly what they're doing.
Mm-hmm.
If you got someone who got 4 kids between age 7 and 17, I guarantee you if they're making money, they're paying all those kids. They're paying to do something. And they're writing it off. And they're not paying any. And the thing about it is that's so great about it, the kids are not filing tax returns and they're getting all of that as a write-off.
Yes.
So
You
just
know,
4 kids with between age 7 and 17 working in your business,
mhm,
times 12. Now you just got $48,000 worth of write-offs. And you still was able to access the money and spend it the way you needed to for your children to do all the stuff they wanted to do. And it was actually, you make things that wasn't tax deductible. So all the back to school clothes, all the after school activities, or for my son, he does karate, he's a blue belt now. So all of that now is in lieu tax deductible.
mhm. Wow. I mean, I've loved it. I had 5 children at one point at home with me, all working in my business. So it's absolutely sweet. Well, I want to leave some time for question and answers. But one more question in relationship to the income and the deductions. Okay. There are some people who want to go 5, 6, 7 years with never showing or having any type of income, but have a mountain of deductions available and to write them off. Can you share how that should balance and make sense?
Well, the losses shouldn't be no more than 3 years. Almost any business is going to take 3 years before you show a profit. Now, if you're trying to use this as a tax avoiding mechanism, then you're going to have to change the business. And people do that. They may have one business. They'll say, I'm doing lawn care. I tried 3 years. It didn't work. Now I have a barbershop. That's a whole new business. Now I got 3 years in the barbershop. It didn't work. Oh, now I'm doing something else. And they continue to do that as long as a 3-year period and they see there's a change in the business. Usually the IRS is not going to have any problems with you showing consecutive years of losses. However, you have to understand when you are a W-2 employee and you're showing business losses, if you do not own your own home yet and you're trying to buy a home, when you show a lot of business losses, you lower your buying power. So if you are making $50,000 a year and you're showing $25,000 in losses, you only have $25,000 worth of buying power to get a house.
Okay.
So you have to be careful about showing losses and what your ultimate goals are. These are the things that you won't hear from most people. When someone comes to my office, especially if they're myEcon, I ask them what their goals are, because I'm not going to have you with a whole bunch of losses if you trying to buy a house, because you're going to need every dime you got to get the right pre-approval to get the type of house that you want, unless you just want a house with $25,000.
Right. Where you gonna get that at? But
They come to Georgia, there's some here. They may not want to live in it, but it's some here.
All right. Well, I don't want to take up more of your time, and I certainly appreciate what you have brought to the table tonight. I think it's going to be a lot of confirmation for the team and a lot of education for the team. We could probably go on and on and on about how this works, but I'm thinking that when we talk about those losses and balances, our goals should be, even if we want to avoid taxes, somewhere in our goals, don't you think it should be to make money, to build a team? Okay, because I sometimes seem to, I'm being nice tonight.
No, you can say it. Most people, a lot of times people get into all types of multi-level marketing so they can show all types of losses, so they won't have to pay any taxes, because that's what they do. But if you just have to know what are your goals, Because if you already have a house and you have the car that you want, but you're trying to lower your taxes, then probably showing your business losses is the goal that you want to do. But if you're the type of person that you're saying, no, I'm trying to shift my income because I'm trying to pay down my debt because I'm trying to get extra money in my pocket, or raise up my credit score to buy a house, you may not want to be showing all those business losses.
Okay. All right.
And the
Well,
ultimate goal should be you would want to build a team.
mhm,
And even if you don't want to build a team, sell the products and put
mhm,
business income into your pocket, because only by doing all of these things and income shifting, what you're doing is ultimately setting yourself up to be free. myEcon is just what I feel is sometimes people want to trade their job for myEcon. And I don't think that's the purpose. The purpose is for you to be able to income shift on the where you are now. Get
mhm,
the money to eliminate the debt that you have, and
mhm,
then be able to do what you want to do with the. And now, when you eliminate debt, you got all this extra money. Now you can really think about what your purpose is, and then invest that money into it, and that will get you from the job that you want. And it's not something that's going to happen overnight. It may not be something that happens in 6 months. It may not even be something that happens in a year.
mhm.
So sometimes things are going to take time depending on where you are, how much debt you have to eliminate, the fact that you want to invest, because that's the goal. You want to take 3 months to get in, 6 months to start getting down debt, 9 months to start getting your business income and investing some money and getting all of that together. So I don't want people to get in and think 24 hours later they're gonna have 1,000 people on their team, and no, that can happen. But I just don't want them to go in with that. They need to know that they got to work, the go through the studies, work the program. When they start income shifting, do the right thing with the income shifting money that they receive, eliminate debt, start to get some investment income, start building business income, and then all the rest will fall into place.
Mm. Oh, wow. I love that wisdom. That's what we need right about now, because we have people who will enroll, disconnect, enroll, disconnect, and we find them somewhat saying, it's nothing, it's not what I thought it was, or this didn't work for me. You get all kind of things. And my goal for our team especially is to get them to understand what you just said, is that, you know, it doesn't really produce like that overnight, and it depends on your goals. And then if you show up for the game, you'll win, you know, pretty much. And you just spoke to that, and I appreciate that. We have some questions and a few questions. Do you mind taking a few questions
Oh,
right now?
no, not at all. I don't have a problem.
Okay, I'm gonna go ahead and unmute some of them. I have one question. Let me see if I can find her and unmute her. I think I gotta unmute everyone in order. This is a call-in, must be, okay. I'm gonna have to unmute everyone, and then you can go back and mute yourself out. But if you have any questions at this point, guys, this is ladies and gentlemen, this is the time to ask that question. I'm not sure if I can hear Nathan Peel. Are you there? Okay. I was unable to, I don't know. I think she's on the phone call, and I'm not sure how to take that off of mute. So I'm going to ask her question. She texted me and she said, what about when your children are in college? Can they work part-time and it be tax deductible? How does that work?
It can be tax deductible, but they're gonna be subjected to some to Social Security and Medicare taxes. It can still be under now. The college age child can still be under the threshold where they won't have to pay taxes. But the thing you will have to pay, because even though they withhold Social Security and Medicare from wages, the business has to contribute money to that as well. So you can put your college age children into your business, and you can pay them $12,000 a year, so they won't be subject to having to file taxes. However, you will have to pay Social Security and Medicare taxes.
Okay, all right. Okay. Any other questions? Open your lines and go right ahead. You bet. I got a question probably, because I think we have some on here. How does this work for those who are receiving Social Security benefits?
One thing about Social Security, they always keep saying that it's some magic number that they can make per year. I just use 10,000 because I haven't seen anybody who's made more than 10,000 have any issues with Social Security, and especially people who are receiving SSI as well. Because you got Social Security retirement, you got Social Security disability, or just SSI payment. So I will always say just keep the business income at least under 10,000. Plus, you got to understand, if you start making business income, your Social Security benefits could become taxable. So I just say use $10,000 as the marker. I try not to be in the business making. I tell anybody getting Social Security, don't make any more than 10,000, so that way your Social Security will still remain not taxable.
Okay, all right. Any other questions? I'm looking on my chat now to see. Do you have any questions? Okay, Scott says, how does she deal with the negative, Scott, I can't see the rest of it. Are you talking about negative responses, Scott? I think you guys can come off of mute. How does she deal with the negative? He's trying to type.
Can you hear me now?
I
Can you
hear
hear
you
me?
now. Go ahead and tell us, Scott.
I'm sorry about that. I got fat fingers. I was typing too fast.
Go right ahead, Scott.
When you said multi-level, you said multi-level marketing earlier.
Yes.
When you have potential clients and things of that nature, how are you dealing? Because everyone has preconceived ideas about multi-level marketing, and sometimes when you are in it, and as far as trying to expand your business or whatever, I know that you're said to like keep going and everything like that and do the numbers, but sometimes when you constantly seems like you constantly run into people that have a negative reaction to your business module. How do you deal with those aspects of the business? I know this doesn't have a lot of things to do with keeping up with but since you said multi-level marketing earlier, I just wanted to ask you that since I had you on the phone.
Well, let them watch you. See, I'll give you a prime example. When I came in and I had 10 people on my team right away. By the time the end of the year came, I came in September, I had 10 people on my team. By the time December came, I had nobody. Because they all got in it thinking that I was gonna be the person who was just gonna make everything happen for them while they were in it. Now, you're gonna work this. If you can't work it, then there's no sense for you to be in it. And that's what you'll get with multi-level marketing. A lot of times people will say, oh, it's a pyramid, you gotta recruit. So you gotta show. Sometimes you just gotta be quiet and show. Now, if I always post, this was my paycheck then, and this is my paycheck now. I'm bringing home $568 per pay period. Before myEcon 2 years ago, I had A, B, C, and D debt. It's been 2 years. I have no debt. So either you could get in and do what I'm doing, since you like what I'm doing, or you could just continue doing you. But once they see that, this is why I said work in the business, shifting your income, eliminating debt, start investing and building business income. Because when they see what you're doing, and they're going to see the change because you're going to start doing things that you wasn't able to do before. They see you, now you got your car paid off, you start taking a couple of trips, you start going places, they going to ask, what you doing to do all this? It was myEcon. Remember the thing I told you about that you said it was a pyramid? That's how you deal with that. Sometimes some people you just gonna have to let them watch you, because if you very new in the business, you really can't talk about the business to somebody. You're gonna need somebody else who's been through the business to do your talking for you. So it's not bad. It's not bad for you to say, "I'm new, so I'm gonna bring you somebody who's been in it for a while and has done some things." And I'm more than prepared, like me, for my team to show. This is what I had. This is what I don't have now. I had this, now I don't have that now. And you show the income shifting, because I remember I posted up something and everybody, even people who wasn't on my team, was sharing it, because I was like, I income shifted $13,000 back in my house, and all this money went on my mortgage. And they was like, oh, it was wildfire. They was sharing it all around because that was the people's tax accountant. But anybody could do it in my econ. It's not open just because I just know taxes. It was just that I was shifting my income and eliminating debt. I was doing the right thing with the income shifting.
That's powerful. Scott?
So Scott,
Okay.
just let them watch you. You continue working the business and not be discouraged, and then let them watch and see what you're doing. Because
Okay,
Scott, are you married?
Oh no, no, I'm not.
Well, okay. Reason why I said, because if your wife, you start paying off debt and stuff, your wife is gonna talk. The wife gonna talk to the other wives. They gonna be like, "What you do?" Oh no, because my husband working this business and he doing this.
Mm-hmm. Mm-hmm. Mm-hmm.
And to follow up on that question, can I ask you one more about the mileage thing? That's another one that I've been over the course of time. Reiterate that one to me. Say that again about how you keep up with yours. First of all, do you use any particular app or anything like that to keep up with your mileage, or are you just keeping a log book, or how do you?
Well, I use two apps. One app I do use the cash flow manager that we have in my econ. But because I'm a tax professional, I use an app called TaxBot. It costs $100 a year. But I use it because I do a lot of networking in my business. So I go on business meals a lot, and you drive to them because my office is in Fayetteville. I go to Atlanta a lot. So it's just that for the way that app is set up, I allow it to go to my email to pull out information. I take pictures of my receipts, and it ties my information together in a nice little bow that I like. So I use both. I use Cash Flow Manager for some things when if I'm doing things just in my econ business, like when I travel to Game Change, or if I leave the state to go to somebody else's state for my econ, I use Cash Flow Manager. But because TaxBot, I like the way it ties a little bow for me when I do business meals, and I do them a lot. I use that app for that.
Okay, then thank you.
You're welcome.
All right. Do we have any other questions, you guys? Any other questions? This is the time. Our time is about up, so go right ahead and ask your questions. All right. If we don't have any other questions to be asked, I can take you off mute if you go to the chat. I want to make sure you've got the expert here tonight, and this is your time. Okay, you can write it in chat. If not, I want to make sure that Yvette, would you tell us about your products, and tell us again your website that everyone can go to so that we can patronize you and stay in contact with you.
Okay, well, the book has its own website. It's called MaximizingYourTaxRefund.com. It's a book that basically teaches about taxes, all the education credit, children credit. Chapter 7 is all about having a home-based business, how to calculate having a home-based business. I wrote the book for people who were already doing their taxes themselves. It was just because one time, most of the people who I was having as new clients were people who used TurboTax and messed up. So they had to come in to use professional help. So that was my purpose of writing the book back in 2016. The book comes with a 1-hour consultation where you get to speak to me for an hour and we can talk about business, credit, life, whatever you might want for yourself. But I also have other books that's on Amazon. They're ebooks. One is Master Small Business Taxes that tell you how to master your taxes in your small business. I have a book called You Owe the IRS that'll tell you what to do if you owe, to get an offer in compromise, to make payment arrangements. I also wrote a book called The Benefits of Becoming an LLC, which basically teaches you how to become an LLC, how to set up your LLC online, and how to stay tax compliant. I realized I love taxes, but I also like to write. So I do have an Amazon author page, which I write blogs, and when I do them, they update into my Amazon author page. And I do share a lot of tax knowledge. I got a YouTube channel that's, like I said before, called The People's Tax Accountant, where I put out videos about different tax topics. I'll be doing more when tax season ends because I'm going to be doing a series about this new tax bill. I'm going to take portions of the bill and break it down for individuals and then break it down for businesses because it's going to be different. But the main thing is the one thing that you already done is if you did not have a home-based business, the best thing to do right now is to have one. The only way you're going to survive tax-wise to 2025 is having a home-based business in place. That's it. If there's no other talk off you could give anybody, that's the one you want to get. If you are operating strictly as an employee under this tax bill, you are going to lose. Especially unless you're one of them people who get earned income credit and that was it. They're going to still be okay. But I can guarantee you a married couple with 4 kids will not end up the same way tax-wise as they was in 2017 because we already eliminated all the personal exemptions. And the personal exemptions was what was lowering a lot of tax liability. It's not doing that anymore. You get one standard deduction and that's it. And if you live south of the Mason-Dixon line, you are not itemizing your house, your mortgage interest, your property taxes. You're not doing that because the property tax is not high. So how can I recapture the loss of having a house? Because that's the American dream. You get a good job, you buy a house. What am I getting a house for now? Because I'm not even going to be able to write it off. You're going to be able to do so through a home-based business.
Well, that you have it, people. I think we've been sharing some of this. And so, speaking to you as a myEconer, I'm just going to say, think twice about being so reserved in sharing your information. From what I get from this call, you're so reserved that you can't create an avenue to win, to be in the game. And also, you need to think about your involvement, your teaching, your training. If you're laid back and you're always busy, it won't be anything that we can do to help you during tax season because your season is up, your planning is gone. You can't get this knowledge right at tax season. You can't. You just don't win that way. And then it takes time to build, to understand, and to record your deductions as well the proper way. So I just want to say thank you, Yvette, for joining us tonight. You're an awesome woman. You got so much knowledge. I've taken your book. I want everybody to know that I have her books and they are easy to read. I was amazed because when I started reading, I was like, oh, Lord, I need to go through the book. And I said, okay, I'm going to have to sit down, get me some coffee, read back and forth because I'm a slow reader. But gosh, it was so easy and so simple to understand till that's why I'm really purchasing the rest of them. Like even simple-minded me, can go and understand what her training and what she is sharing with us. So you guys don't hesitate to get your materials so that you can be up on the know. And those of you who are building a team, you've got people on there, you're going to want to get it, and you're going to want to encourage them to get it. And it's a great tool to be able to teach and to share with other people in your own meetings, okay? So with that being said, I don't know. I asked for the website address one more time. Oh, I'll give it to you. I'll post it on our group meet, Scott. Okay, won't be a problem. But with that being said, you guys, I want to thank you. As I thank Yvette, I want to thank you for joining us tonight. It's been a great call. You guys look for our private group. I want more. What I'm doing is I'm going back and forth as we share the knowledge. You're going to need to know the tools. And so I'll be back on there live to share the tools that you have, train you on that, make sure you're up and running and you're doing what's necessary to keep good records. All right, thank you. This has been Team Vision Training Call on Monday night. God bless you, and we will see you back here at the same time, same back channel on next Monday night. Good night.
All right, good night.
Aye.